incredibly unprepared and financially weak the West is in general. The bottom line is the net result is if no one else is buying your debt, you have to buy it yourself. Western media has effectively boycotted an alternative view, whether that was on COVID with science or whether that's on the war with geopolitics. We're getting a very Western-centric view. But most of the people from the State Department of the 90s said putting the Ukraine into a NATO alliance was effectively suicide.
We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodjevics. Joining me today is Matthew Piepenburg, Commercial Director of Matterhorn Asset Management and the author of Rig to Fail. How are you today, Matt?
I'm good, Tom. It's good to be back. It's good to talk.
Great to have you back. I know last time a lot of our listeners really enjoyed the interview that you and I had, and I know I've been personally looking forward to speaking with you again. So why don't we start off on something I heard you speak about recently, about debt-soaked nations or cornered empires and how they typically use war as a distraction or a policy. So who in your mind does this apply to more in this current situation?
It's a tough, broad question. I mean, it starts with the word debt and ends with the word war, I guess, that question. And sadly, they're tremendously related and correlated. I'm not saying it's always deliberate or there's some evil empire out there looking for war at all times, but debt and war are synonymous in one sense. When in one way, when you're increasingly desperate, at the most kind of, I guess, diabolic way. In the past, war was a good distraction or a good excuse to keep people from blaming their leadership and blaming some bad guy crossing a border. As we're seeing now, Putin is the bad guy du jour. I'm not pro-Putin or anti-Putin. I'm just saying that's the Western media's attempt to paint Putin as Hitler is an exaggeration. Doesn't mean he's a good guy, but this idea of all black, all white is classic kind of identity politics thinking and exaggerated and missing a lot of the nuances. I'm not saying that the war in the Ukraine is an intentional distraction from the massive amounts of debt in the West or in general, or the United States in particular, but it certainly is a convenient war right after COVID, which again is a can of worms that we can talk about in more detail. I think the other thing that war is showing us right now, regardless of whether it was some kind of deliberate smoke show to try and push the mainstream ideas away from their economy or their daily lives or their frustration with governments and have Putin to blame or COVID to blame. One thing that the war in the Ukraine is showing, which is not really being manifest, I think, in an obvious way, is how incredibly unprepared and financially weak the West is in general and the US is in particular. And I think that's particularly true in the case of the sanctions, which I'd love to talk about in more detail, how the sanctions are backfiring on the West. Again, that doesn't make me politically pro-Putin, and I'm applauding Putin and glad to see the West embarrassed. But, we are pointing a gun at Putin and shooting ourselves in the foot with these sanctions. There's just no doubt of that. And the weakness of the West financially and the weakness of their options and the weakness of their policy is driven in part by the weakness of their economy, which is driven by the extraordinary nature of their debt. And we can dive into any of those things in more depth, but they're highly correlated.
Absolutely. And I've spent a lot of time trying to learn just for myself, understanding more about the Russia situation, the Ukraine situation, and all of the aspects of it. And I've done a lot of interviews on the show to try and help illustrate that the stuff that we get on the mainstream media is just completely maybe misleading is the most charitable way to say it. But to your point, Matt,
well,
go ahead.
I was going to say I'm a lawyer for about 10 minutes, so I'm quite fluent in lawyer jokes. But one thing I will say proudly is what I took most from a legal education was the forced amount of critical thinking it required of you in those 3 years, whether it was constitutional law and the limits of the First Amendment or criminal law and the death penalty or abortion rights. I remember spending years, we were forced to maybe in a criminal law case, for example, we have to spend 6 weeks preparing a case for the death penalty, and then 6 weeks preparing a case against the death penalty. In other words, it forced you to take two sides of an argument, to be critical thinking. It didn't mean you were pro or against, but it made you look at one state of events from two different perspectives, which is something woefully lacking in the case of what's happening in Russia or the Ukraine right now. As an example, we're seeing not the whole circle, we're seeing just arcs of that circle. So there's a fundamental misunderstanding there. Western media has effectively boycotted an alternative view, whether that was on COVID with science or whether that's on the war with geopolitics. We're getting a very Western-centric view. Again, introducing Eastern or Russian perspectives doesn't mean you're pro-Putin or pro-war or pro-violence, but it's very important to understand all of these perspectives before you make an argument. And what we're seeing from the Wall Street Journal to Barron's to Twitter to Facebook is a very truncated, censored view of reality, financially, politically, and humanistically, I think. And part of that truncation, first of all, just the very origins of the war, the idea that Putin just got up one day, decided to invade an innocent population for his pleasure, and that the West was completely naive or completely caught off guard, and that the West was shocked by this type of behavior, ignores history. It ignores Russian interests. It ignores our own hypocrisy or our own behavior. For example, Kennedy did not want to see missiles in Cuba in 1962 and was willing to potentially invade Cuba if he'd followed his cabinet or his military advisors over that issue. Khrushchev and Kennedy did not want to go to war over it. But the Americans were very upset about missiles in Cuba. Well, Putin has been arguing for the last 8 years, since 2014, that he was upset about the notion of a NATO Ukraine. It doesn't mean it justifies killing innocent people. It doesn't mean I'm in favor of war. But the idea that we're shocked by the self-interest of a nation like Russia or the self-interest of an individual like Putin, it shouldn't be that shocking. I think this was an incredibly avoidable crisis that now has become a crisis because of such failed diplomacy, whether it's Biden or Kamala Harris, who are the least qualified to stand up to these type of issues or to understand this type of history or the economic nuances of it. But most of the people from the State Department of the 90s said putting the Ukraine into a NATO alliance was effectively suicide. That was pushing too many buttons on the wrong side of the fence. And to act shocked and surprised and to blame this entirely on Putin, I think is wrong and on the origins of it. But I think also to then react the way we have with these sanctions, taking Russia off of the SWIFT exchange, for example, the dollar-based SWIFT exchange, freezing its FX reserves, or sanctioning its access to IMF SDRs, these type of financial weapons, which are trying to puff the chest of the West or to puff the chest of U.S. policy, are coming back to bite the West in the foot. Not just Germany, who can't afford to live without Russian oil and gas. I think 50% of its gas and 35% of its oil comes from Russia. But what it's done, what those sanctions have done to get optics, to get headlines in the first few weeks, to show Western strength, Western virtue, Western dismay at Russian interests, was show and reveal just how weak the West really is, just how financially dependent it was. So it had two tremendously important consequences. It pushed Russia closer into China's arms on financial transactions and political transactions. And it showed the world, the rest of the world, the non-bad actor world, that the U.S. in particular, the West in general, are prepared to freeze assets or cut you off from SWIFT exchanges or even IMF SDR access if you don't toe our line. And the rest of the world is saying, well, you can't put that genie back in the bottle now. We've seen what you've done to Russia. Believe me, China's watching. India's watching, other countries are watching. And what is the result? Massive changes in the financial system, which we can talk about. Massive changes right now in the global financial system, which are, I think, really worth diving into.
Yeah, absolutely. And I mean, there's a ton of points there that we're going to get to, but I'd like to go back to that idea that you introduced about being a lawyer and having to take both sides of the argument. When we stop and try to evaluate any situation from each side, how do you not get bogged down in that and frozen trying to make that argument from both sides? How do you end up picking the direction that you end up wanting to go?
Well, it's really important to, first of all, have as many facts in front of you as you can, whether it's a legal issue or an economic issue. You have to have the data, the numbers, the perspectives, the self-interest of both parties, the defenses of both parties. There's never usually, in short of psychopathy, there's usually strong arguments on both sides. There usually are. And ultimately, of course, we all are human. We have our ultimate decision, which we make for ourselves based on the numbers, the data, the crime, the evidence, whatever you have it, whether it's economic or legal. You have to have as much information as possible, as transparent as possible. And that's what's really missing, especially in the West. We used to mock the East for its propaganda or its omission of facts. But whether you're talking about the Wall Street Journal, or you're talking about the Federal Reserve and the FOMC notes, or you're talking about certain Facebook platforms, what is omitted, what is not talked about on the West, not just the East, is staggering. And that makes it very hard for any investor, American, European, Eastern, to come up with a nuanced, balanced perspective. But of course, once you have as much information, including other people's perspectives in front of you, you're going to make a decision. When that decision is being made for you, as we saw in the COVID case, where Biden, for example, or Trudeau in Canada's case, are deciding for all people issues that are highly debatable and highly nuanced, and frankly, quantifiably, provably different, including vaccine effectiveness, which we don't want to get into that rabbit hole here, but there are rooms and avenues and space for serious debate, which is simply missing now from the West. And that's particularly true of what we went through in the COVID crisis. It's now being replicated 2.0 in the Ukraine crisis. So many facts about petrodollar, about US reserve currency status, about access to debt, about interest rates, about central bank policies, how that affected this whole thing, are simply not discussed in an open, honest way. And data that we don't like is kind of not making the headlines, and virtue signaling that we do like, we're all against war, we're all against violence, that's making the headlines. But the ability for headlines or media outlets or politicians or central bankers to spin something, like Trudeau has spun the Emergency Act in Canada, that's an appalling use of the Emergency Act to protect his political power. Again, there's room for debate on that. You can take two different views, left, right, or center, but it should be discussed more openly rather than by fiat or by kind of oligarchical declaration, which is making people from, Jordan Peterson all the way down very upset right now. It's not a political stance. It's an intellectual ability to have as much information as possible in front of you. Transparent. That lack of transparency, that lack of honesty, that lack of multi-perspective, whether it's in politics, whatever your political stance, left, right, or center, or in markets, whether you're a bull or a bear, you need to have as much information as possible. What I've seen since COVID and into the Ukraine and now into the financial sanctions is a staggering lack of full information. And so you have to be either a professional with a Bloomberg screen and access to multilingual news sources, or you have to hopefully get access to conversations like this so that investors and viewers can make their own decisions. They don't have to share my view on the Ukraine crisis or on markets, but they should at least get as much information as possible. And again, I hope that that's something we can get through today, because I think it's really essential right now, because people are worried, people are concerned. Inflation's a concern, politics are a concern. Regardless of your political bend, the power of your currency is a concern. The future of these markets are a concern. They are affecting real people and not just hedge fund guys or gold brokers or whatever. So it's really important time right now.
Mm-hmm. So let's just start with specifically the sanctions. I forget who referred to it as this, but the West has used these nuclear financial weapons, and it's basically used up its arsenal of those weapons at this point. So how do you see that coming back to start biting the US in the butt or in the foot, specifically about the sanctions at this point?
Yeah, that's an excellent question. I mean, for years, as the holder of the world reserve currency, as the great American empire that came out of World War II, as the world's manufacturer, the world's creditor, now we're the world's debtor and we're the world's outsourcer. We're not the same economy. But, nevertheless, for years, we could use our dollar and our policies to bully countries, non-nuclear countries and developing countries like Venezuela or Iran very easily. Mm-hmm. When you start poking the tail of Russia or China indirectly, it gets a little bit different. We can't have the same policies. We can't take them off the SWIFT payment systems or put financial sanctions with the same effect. Even Jamie Dimon at JP Morgan or the heads of Citadel have said the same thing. But more importantly, Barack Obama said the same thing in 2015. In August of 2015, he said, look, we can't play around with our SWIFT controls or our currency controls or freezing FX assets, freezing accounts of major powers. That will have huge unintended and obvious consequences against us. Somehow Biden or the current regime in the West or the Europeans Union or Biden's cabinet have forgotten all these things. Jamie Dimon remembers, and even Barack Obama remembers. When you freeze Russian assets or you take them off the SWIFT exchange, again, you're creating a system that's going slowly from a world reserve currency led by the dollar to a multi-currency system now. That has massive implications for global markets, massive. That was not making the headlines when we were talking tough about sanctions, about moral rectitude, about financially showing Russia or the East what we can do. Condoleezza Rice famously said, Russia will run out of cash before the Europeans run out of energy. Well, that's factually not true. FX reserves out of Russia are the highest they've ever been. Germany, as I indicated before, which, by the way, is on the very verge of recession right now with PPI inflation at 40, highest it's been in 40 years at 25%. Olaf Scholz can't afford to play too tough with Russia when it needs its oil. The fact is Western Europe, and in some cases farther beyond Western Europe, needs Russian energy. And by penalizing Russia, taking them off of this system, they're going to now change the financial system completely. They're going to do more work with China, more trades with China. China's not sanctioned, it can quote unquote launder money through Chinese banks for Russian trade. But what's happening too, as I said earlier, the domino effect is other countries are looking at the West with a raised eyebrow. Saudi Arabia is now in conversations with China to sell oil in Chinese yuan instead of US dollars. I know other Arab states are talking to China, Russia, and even France about selling oil in non-denominated dollars. This idea may seem boring to some people or in some headlines, but that basically is taking away the petrodollar. Mm-hmm. That is the first step in the end of the petrodollar. That has massive implications for the currencies and for inflation and for the hegemony of the US dollar. What we're seeing not only is the West showing it's too poor to simply fight the Russians with sanctions, because Russia and China are so linked, and Russia is a major power, is a major nuclear power. It has much less debt to GDP stress than the US or Japan or Western Europe. So as much as Russia can be hurt, it can hurt longer than we think, and maybe longer than the West can handle this, because we're not energy neutral by any stretch of the imagination in the next 5 years. But this idea of other countries now trading outside of the US dollar in hard assets, in particular oil, has massive, massive implications, because we're going from a mono kind of currency of the US dollar, world reserve currency, into a multi-currency system. That's happening in real time right now. That's not a threat. That's not sensationalism. That's not, gloom and doom. Again, these are facts on the ground that have tremendous inflationary implications for the man and woman on the street. And so it does affect them. What policymakers do to get headlines or to rattle their sabers or to, puff their chest for 10 minutes on the front lines has months and years of effects on people on the streets, from Canada to Paris to New York to Idaho to Michigan. And I think the hubris of Western leaders to ignore that. And we were joking before this call about, celebrity talk show hosts saying, hey, a couple more dollars in gas price, it's good for my conscience. I can do that. Well, there are people who literally can't afford that $2 for their conscience. Their jobs, their margins are over once their commuting costs come in. They're not making enough money. And I was saying, I don't live on Park Avenue or Malibu anymore. I live in the countryside. And many people I know who have children who go to work can't make any money now. They can't pay for school supplies. Their children have given up their jobs because they're not making enough money to pay for their gas to get their jobs. So these policies, these economic macro things, come down to the real world. And I think to be dismissive of that, as the central banks are, as the headlines are, as the celebrity du jours are, or even as our leaders are, is incredibly arrogant and incredibly dangerous. Again, regardless of your political bent, left, right, or center, you can't deny that inflation and the effects of de-dollarization and the weakening of the US dollar as a respected global reserve currency, as a petrodollar, the implications of that are massive. And sadly, the people that get hurt the most are the people who aren't worth millions of dollars. And that's just tragic.
So again, you brought up the fact that the US seized Russian FX reserves. Do you see this as a major shot across the bow and an effective default, as Putin said? And does this really, signal to the rest of the world that US treasuries aren't really safe anymore? And is it possible that the US is basically headed the way of Japan, being the only buyer of its own debt?
Yeah, look, I mean, the U.S. Treasury is one of the most unloved IOUs in the world right now. And let's not forget that the vast majority of U.S. Treasuries are paid for by the U.S. central bank. No one else wants them. And certainly after these FX freezes, the rest of the world is starting to look askance. We're already seeing that in the yield curve and long-term traded treasuries. There's less and less demand for those. And that creates all types of implications for the markets, for inflation, and for the dollar. If no one wants Uncle Sam's IOUs because he has 30 trillion in federal debt and 90 trillion as a country in combined household, corporate, and federal debt. And these are staggering numbers. I was joking this morning, I couldn't even write 90 trillion on a page. I don't even know how to put that many zeros. But that kind of debt, like just like, if you burn too many bridges with your friends, they're not going to loan you money. If you're a country that has that kind of debt, no one's going to want your IOUs. And so what that does is it forces the Fed and the central bank to go look at monetary easing or quantitative easing with more aggressivity, even though they're talking about tapering and raising rates. The bottom line is the net result is if no one else is buying your debt, you have to buy it yourself. You have to push those bond prices up artificially to keep interest rates contained or yields contained. And it's kind of boring, but yields move inversely to price. So as bond prices go up, yields come down, and yields have to do with interest rates. The one thing that the Fed and the US stock markets and the global markets fear more than anything is rising rates. And the only way to contain those rates is to print money to buy bonds to keep those rates down. Well, you see the vicious circle that we're in. It's what this great bond legend, Mohammed El-Arian, described the other day. He said the Fed has no best case scenarios anymore because our treasuries are so unloved, because we have to buy them ourselves, because we have to print money to buy those treasuries. What that means is inflation is inevitable because the Fed is in a corner. If it doesn't print money to sustain its bond market, then the bond market collapses and the stock market collapses with it. So you have a market implosion. If, however, it gets tough and tries to fight inflation by tapering, well, then it has to fight inflation. It has to raise rates, but we can't afford to raise rates. So it's either hyperinflation or extreme inflation, or it's a collapsing market. Those are the only options the Fed has. So there is no best case scenario left for the Fed. And of course, if they're going to do what we know they're going to do, they're going to allow inflation because of debt. This goes back to the four-letter word that defines everything. When debt is this bad, one way for debt-soaked, I would say, almost pathologically, criminally inept nations like the US and the central bank and the Fed, one way for debt-soaked nations like that to get out of debt is to allow inflation. They can talk about combating it, but deep down, what's not being said is they need inflation. They need negative real rates to slowly get themselves out of inflation. Now, that helps the government. It hurts the citizen. So it's a complete conflict of interest. So they're not going to fight inflation by really raising rates high. They're going to allow inflation because negative real rates are historically confirmed throughout time way for debt-soaked, I'd say corrupt regimes like the US to get out of debt. And of course, the one who pays for that the most is the man on the street. And so we're going to have more inflation because we have so much debt. Our central bank is cornered. There is no best case scenario left. It's either inflation or market crash or both, stagflation or recession with inflation. But inflation is not going away. And to see the Fed for the last year talk about inflation like it was transitory, when we said over a year and a half ago, inflation's coming and it's going to be brutal and it's going to be permanent, not transitory or persistent. It took the Fed a year and a half to catch up with us. No, they knew it just like we did. They just weren't being transparent. Going back to the original thing we talked about, you have to have transparency. I think the American people, the Canadian people, the European people are capable of making up their own minds if they're given the facts. And the fact that those facts are being omitted or kind of fork-tongued or washed over. I mean, Powell, like Greenspan, Bernanke, Yellen, they're geniuses at ignoring the truth and telling you to be calm and carry on. There is no scenario where the central banks can save you. They can print lots of money to keep the stock market alive, but the money that you have in your wallet, your checking account, or your portfolio is losing inherent purchasing power by the day. So you're losing. You're being suckered by your own central bank. But of course, they'll never say that. They'll say there's going to be labor force participation growth, other things. But you can't when you have a debt to GDP of 122% or 100% plus as the rest of the world, and Japan's off the charts. When your debt to GDP crosses that level, mathematically, as any economist would know, including anyone who works at a central bank, growth is cut by a third. So you're not going to grow your way out. You're lying if you say you are. If you try to cut your your deficit spending, which is what keeps these broke countries going, borrowing more than they actually earn, well, then you kill GDP by the same amount as you cut deficits. So we're in a no-win situation after years and years of drunk driving with cheap interest rates and easy access to debt. We've now had a fatal car accident, and the dollar is going to suffer as a world reserve currency. The rest of the world's going to move slowly away from the dollar. Inflation is here to stay, and pundits and politicians and central bankers will not tell you the truth. And I'm sorry, again, sounds sensational, but I don't work for a hedge fund or a bank where I have to be contained by what I say. And I'm certainly not a politician, so I can tell you what I think. I could be wrong. Maybe there's a magical tooth fairy out there that's going to save the markets with some new solution. The IMF certainly thinks that global digital central bank currencies are going to work. That's just more fantasy. You can't get away from the simple fact that you're spending more than you earn. Your productivity is gone. America did two things that ruined America. And I think other countries have done the same. And it's two things. It's corporations and central banks. Corporations outsource the vast majority of their jobs overseas to China and Central America and some parts of Latin America because labor was 1/5 the price. So there's more profits for the executives. And that's not a class warfare statement. It's a simple ontological quantifiable fact. Better margins by losing millions of jobs in your own country, outsource them to other countries. So that was great for the profits. And then what did they also have? They had the central bank giving them free credit, 0% interest loans. So then they borrowed even more money to buy their own stocks to push up their share prices. And since their salary is a part of their share price, the executive class got richer, labor got kneecapped or fired, and then the central banks allowed this. And now we have the greatest wealth disparity in the history of the West. It's no coincidence. And we're also, as a country, broke. So that's why we have kind of anemic policies against what we think is the bad action of invading the Ukraine. Again, invasion, military solutions are an oxymoron. It's horrible. But we have no real power anymore to do anything about it. And because it's all coming back to us. It's all a result of really profligate debt spending. I know it's hard to believe that all of this comes back to that 4-letter word, debt. And a lack of transparency and a lack of ability for the common person to understand how all these arcs of the circle come together.
Mm-hmm. Yeah, that's something I actually wanted to bring up was the fact that the Fed's mandates are really diametrically opposed at this point. And you touched on that perfectly, Matt. But, considering that the US has really only exported dollars for the last, let's say, 50 years, what happens when the rest of the world doesn't want those dollars and those dollars do come home to roost?
Well, it's amazing because we've been exporting our dollars and we've also been exporting our inflation because as the world reserve currency, every nation that borrows from the US has to borrow in US dollars. And when that dollar gets stronger and stronger, or when that inflation gets higher and higher, say Argentina is a classic example, they borrow in US dollars. But then they have to pay that debt back in US dollars, but those dollars become more expensive. So then as America prints more money, then central banks elsewhere have to print more of their currency to pay back those. So the inflation effectively just compounds upon itself. And so the dollar has been a weapon against some of these countries. 20 years ago, with $1, you could an Argentine peso with 1 peso could buy $1. Well, fast forward today, and an Argentine peso can buy 2 pennies. That's how much massive inflation Argentina has suffered, as an example. Again, I'm not saying it's all the fault of the West or America, but you see how American dollars and American policies affect other countries. To your question, what will happen as more and more countries lose respect for the dollar? It's an important question. Not only are they losing respect for the dollar, they're losing respect for American policy. For example, the tough guy approach we're taking against Russia. Many countries are wondering when their account's going to be frozen. I was saying in an interview the other day, if I had a bank account that froze my assets for no apparent reason, or because we had a disagreement about politics and froze all my assets overseas, am I going to recommend that bank to you or my friends? Am I going to trust that bank again if we have a solutions? That genie's out of the bottle now. Other countries are starting to worry about the West, and the US in particular. And so they're looking for dollar alternatives. They're going to, Russia's already saying you can buy natural gas for gold. Saudi Arabia and the Middle East are looking to sell their oil in other currencies. The Chinese are looking for ways to do what they've been warning for 10 years, is get de-dollarized. That doesn't happen overnight. But to your point, when there's less and less demand for that dollar, the dollar becomes weaker. Again, on relative strength, versus inherent strength. It's very important when people talk about the dollar, the Canadian dollar, the Australian dollar, the euro, the yuan, the yen. When you're talking about your currency, it's not just its relative strength vis-a-vis the dollar. It's its inherent purchasing power. To your point, if there's less and less trust for or demand for or trust in the US dollar, well, the dollar gets weaker. It gets weaker. And in addition to that, as there's more and more money printing to keep these individual economies alive, its inherent purchasing power gets weaker. So it's a double whammy. For years, the milkshake theory is, look, there's the euro dollar market and the repo markets. There's demand enough for the dollars to keep it strong relatively, but it's still inherently weak against, say, gold and silver. Mm-hmm. But this idea that the dollar demand will keep the American economy strong or the American dollar strong, well, a big part of that dollar demand wasn't just euro dollars and repo market demand. It was petrodollar demand. You have to understand there was no coincidence. So when Nixon welched on the dollar system, the gold-backed dollar system in 1970, when he welched on that, when he got rid of the gold-backed standard for the dollar, it wasn't a coincidence which in a few years we had the petrodollar. So the gold-backed system died, and then suddenly the petrodollar was born. It was no coincidence. It was this idea that we lost credibility as a gold-backed dollar, but now we're like an oil-backed dollar. Demand for any oil transaction in the world had to be paid for in US dollars. That went on for almost 50 years. In just the last couple of weeks, that's changing. That's a massive change. Again, that should be discussed openly at every coffee table, and it should not have to be too complicated, because I know it's a lot I'm throwing at you. But this petrodollar thing is massive. It's massive. And what that means for the dollar is massive. So what it means for the U.S. strength is massive. And for the U.S. economy is massive. That really should be something discussed more from high school all the way to the coffee table. And it's barely talked about right now. Again, in our circles, yes. But the man on the street, understandably, the dentist, the doctor, the plumber, the dental hygienist, any other professional who doesn't have the time to understand currencies or central bank policies or debt levels, has no idea what's happening. But what the U.S. has just done and the West have just done has shot themselves in the foot, because now the world is going multi-currency. The petrodollar is disappearing. Inflation, not disappearing overnight, but slowly getting weaker. Inflation is spiking and currencies are getting inherently weaker too. So that does affect the dental hygienist, the plumber, the doctor, the lawyer, the school teacher, who doesn't have time, understandably, to get into the weeds of international finance. But you see how these very foreseeable things are having direct consequences on everyday people's lives. And I think it's quite tragic.
Mm-hmm. You know, Matt, this kind of makes me think about, as you're mentioning, these unintended consequences. So when we think about, let's say, the show of force or the actions that the US has lobbed at Putin and Russia against their invasion of Ukraine, do you think that this show of quote unquote strength, or maybe a better word is weakness, would embolden other leaders like Xi to take back Taiwan, for example, a lot sooner than expected?
I mean, I certainly, there's a lot to that question. And, again, there is no doubt. And again, I'm not trying to get politics. I'm sure there are Democrats and Republicans left and right watching this. I don't think it's a big shock that it's no coincidence that the weakness shown in the current regime, there was plenty of criticism for Trump. I understand that. There was plenty of criticism for Biden. I can understand that. After the fiasco in Afghanistan, after the rising inflation that we can't control, after the increasingly less credible White House persona that we've had for the last many years, I don't think it's a coincidence that countries like Russia and China are flexing with more confidence than they ever were before. I think the idea of propaganda or war, first of all, as I said at the beginning, I think military solutions are an oxymoron. In a nuclear era, it's madness. And I think we can all share the moral outrage of seeing civilians killed in the Ukraine. I think there are Russians who have moral outrage in that. I think there are Russian parents who don't want to see their Russian sons and daughters killed in combat in the Ukraine. The idea, though, that we are somehow better or morally outraged in a way that the Russians are not, I think is hypocritical. There were just as many photos that didn't make the headlines when we were in Libya, when we were in Syria, when we were in Iraq, and when we were in Afghanistan. It's not to say that I'm, again, pro-Putin or anti-American, but let's be honest. It's realpolitik. Nations have neither permanent friends or enemies, just permanent interests. We, as a country in the West, have used war for our self-interest many, many times more than Putin has since he's been in power. And we've always had a moral reason. It was weapons of mass destruction in Iraq, but if I recall, there were no weapons of mass destruction in Iraq. And there's a whole other story there. Colin Powell thought they were because the CIA told them, but they just weren't there. And yet we still killed hundreds of thousands of civilians. We, the West. I'm not saying that there aren't good or bad reasons for that, but for us to act outraged because people are dying in the Ukraine, and we should be outraged, but to say that's an Eastern or Putin phenomena that we are above is quite hypocritical. But to your larger point, this economic weakness, this moral hypocrisy, and this, I think, this political weakness is a perfect storm right now for the West. I mean, from Trudeau to Biden, there's not a lot of faith in the West. And Macron to others in Austria, Germany, and Switzerland, there's not the same amount of, that doesn't make me anti-Western, but there's a sense of weakness, a sense of a lack of great statesmen today, a lack of great transparency and economic transparency, and certainly COVID transparency. I think that the trust is gone. And so when that trust is gone, countries, whatever you can say of Putin, and there are many things you could say, good or bad, evil or great, he's not stupid. He's a chess player. He thinks many moves ahead. Biden is a checkers player. The West are checkers players. And of course, to your point, China and Russia have been through a lot in their histories, and they're able to suffer perhaps more than Western cultures. And they are thinking, is this a chance now to show more force as Western systems implode or lose more faith? And that is the risk, that you go into places like Taiwan or look sideways at Taiwan. And what will the West do then? Freeze China's FX reserves? They could, but China has backup plans. And is there a nuclear option against China or against Russia? There is no such thing as a nuclear option. I challenge anyone to think of one scenario where a nuclear war makes sense in any scenario today, in this time, not 1945, when you're the only one who has the nuclear weapon. But in 2022, a nuclear option doesn't exist. And so it will become an increasingly more of a financial war, which of course the East will suffer just as much as the West, but we are not uniquely powerful anymore. And I think what these sanctions are showing is, and the inflation that we're suffering from now, which is just beginning, is just a symptom that we're not as strong as we thought we were.
Mm-hmm. Yeah, I think an important point to kind of reiterate there too is that China needs the West as a trading partner. So in some ways, it is possible that sanctions could have a bit more of an effect there, because they do need each other. We need their goods just as much as they need our, I think the US trade deficit last year was something like $350 billion. So, in some ways they do need each other, right?
Oh, absolutely. When I say that the West is weak and that we've shown ourselves as weak, I'm not saying that China and Russia are somehow powerful and that they've won. We're all going to suffer now. I'm just saying the idea that we can just flex our muscles and solve things is an illusion. Mm-hmm. Yeah, there's a lot of mutually assured destruction in nuclear war, but there's mutually assured destruction in financial war too. And I think what's missing from the headlines today is the longer term ramifications. It's not like China and Russia are going to tiptoe through this like running through the roses. Mm-hmm. It's not like they're smiling through this. There's going to be pain, but there'll be mutual pain. And the question is, who can last the longest? And as I quoted Condoleezza Rice earlier, that arrogance of Condoleezza Rice saying, well, the West can last longer than Russia. Well, that's just not true quantifiably. And so that kind of arrogance is what got us into this mess. And we didn't come up with a diplomatic or financial solution. We've been pushing each other's buttons. The trade war, which began under Trump, wasn't helped by the COVID crisis that continued into Biden's administration. All of these roosters are coming home to roost. I mean, all these chicks coming to roost. I mean, the consequences are not all diabolic, but they're going to be painful. Mm-hmm. And again, going multi-currency, going away from the petrodollar, living in an inflationary setting, it doesn't mean Armageddon. But it certainly means the next 10 years are not going to be as enjoyable as the last 10 years. And it doesn't mean the stock market's going to go up another 450% without massive dilution of your currency. So we have a generation that doesn't know this kind of financial pain. We've suffered through a political pain of COVID and the absolute challenge and insult to our basic rights and liberties. We've gotten used to that. But those kind of pain points get even worse when you're broke, when your dollar can't buy enough gas to get you where you want to go, or you can't make your rent, or you can't make tuition, or you can't function. Then the faith starts to fall apart even faster. And again, not gloom and doom. I'm just saying for many people, that's already a reality right now. Mm-hmm. For those who are less price sensitive, it's still painful to watch, and it's painful for the country that you live in to see it, unfold in this way. It's not the end of America or the West, but it's the end of American and Western hegemony for sure. And it's the slow end to the U.S. Dollar as the powerful currency in the world. I think that genie can't be put in the bottle again, back in the bottle again after what we've done in the last few weeks.
Yeah, certainly the end of the West as we've known it for the last 30 years, right?
It's amazing. It's amazing. Yeah. Right in front of us. And it's not discussed as openly as I think it should be. I don't think people realize what's going on right now. And it's not their fault, but it's incredible. Yeah.
Well, and I mean, there's definitely a possibility that a lot of people just suffer from recency bias and think that it is things are going to continue the way they always have. So, Matt, we've talked a lot about different currencies today. Do you think about trying to trade these different currencies, or do you just think about, buying gold with any of these currencies and ultimately can exchange the gold for the currency that you choose later on?
Yeah, look, of course. I mean, I'm going to be transparent about my bias. I mean, I'm an executive at the largest, private gold vaulting service and ownership service out of Switzerland, but in the world. And our minimums are very high, and it's for a high net worth clientele. But obviously, I have a bias for precious metals. I didn't seek the job. I invested in the company. It's part of what I believe. So I have a bias for gold. And the simple fact of the matter is, gold is not just a precious metal; it's a monetary metal. And I don't look at any currency with any respect anymore since 1970, since Nixon, since 70, 71, 69, going back how far. When you don't have a gold-backed currency, all you have is a currency backed by the full faith and credit of nation X, Y, or Z. The full faith and credit of the U.S., my home country, doesn't have my full faith and credit anymore because years and years of diluting that currency, of dishonesty at the central bank, of a debt binge, of a money binge. I mean, the amount of money we printed in 2020 and 2021 dwarfs all that we printed in QE 1 through 4 between 2008 and 2015. So they have lost their full faith and credit. But I don't think it's much different for the euro. It's certainly no different for the yen. It's a joke. So do I have faith in the peso or the yuan or the dollar, Canadian, Australian, or American? No. And so for me, the only honest alternative isn't because I'm a gold bug. I didn't invest in gold to see it appreciate in price in dollars. I invested in ounces and grams because I look at gold and silver as monetary metal, not as just a speculation asset like certain cryptos can or can't be. To me, it always has been, it always will be a monetary metal. So a bar of gold, an ounce bar, a gram bar, whatever, to me, I can convert that into Australian dollars. I can convert that into US dollars. I can convert that into Swedish kroner or Swiss francs or euros. But those euros are getting weaker and weaker by the day. So I just as soon hold on to as much gold as I can, because to me, it's the only real. I know you can't go out and buy a Tesla with a bar of gold or groceries with a bar of gold, but I can always convert pieces of my monetary metal into whatever currency at the given rate. I see currencies only getting weaker. So to have a shoebox of dollars is almost like having a shoebox of Confederate currency. It's worthless after a certain point. And I think people that measure their wealth in dollars are making, as you said, a recency bias mistake, that they assume that dollar, whether it's $1 million or $10, can buy the same things 10 years from now as it can now. And because inflation is eating away at that, and the inherent purchasing power of currencies is universally and quantifiably weaker than gold, I look at gold as an insurance and as a currency hedge, not as a speculation asset. I don't want to be a gold bug. I choose to be. It's to me, I can't think of anything else. Many in the crypto side would argue that cryptos are the alternative, and that's a whole other conversation. I don't laugh at them, but I've made the choice to go to a monetary metal that's been around for 5,000 years, that has gotten the last laugh at every currency crisis since the ancient Rome to today. I don't think it's going to be any different. I really don't. And that may sound sensational. The world doesn't have to come to an end for me to know that gold is a great hedge. And as Ronnie Sturfler recently came up with a graph recently, when markets crash, when stocks and bonds crash, which inevitably they do, we can't time it, even this insane overextended bubble, but the outperformance of gold to stocks is a median range of 45%. So it's a better hedge against a falling stock market than bonds. Bonds and stocks are too correlated. Again, I go to gold because it's the best alternative, not because I just want to speculate in some commodity. Gold is not a typical commodity. It's not a typical metal. It's a monetary metal.
considering all the topics we've really touched on today, it looks like we're kind of facing this, as you wrote recently, the facing a perfect storm for gold. So can you just reiterate for us, what are the different fronts of that storm and maybe why we're seeing such volatility in gold right now?
Yeah, well, there's a lot of things happening. There was Goldman Sachs. Goldman Sachs. It was Jeff Curry. He came out a few weeks ago. I was impressed to see Goldman Sachs. He's the head of commodity research. Here's someone from Goldman Sachs say it. He called it the perfect storm because there were three converging and frankly record-breaking demand surges in gold. One was from the retail ETF market. You were just seeing a massive surge. The other was physical gold, and that was from countries like China and India were just buying physical gold in the market. I wrote an article on February 18th before the Ukraine war saying, hint, hint, Russia's buying lots of physical gold. That says something. They're preparing for something. Doesn't mean I'm a psychic. Doesn't mean I thought the war was going to happen, but I was watching physical access or physical purchases by countries like Russia off the OTC market. And then there's central bank gold. Central banks are buying more gold this year than they have in the history of gold, in the history of central banks. Mm-hmm. So that was the perfect storm in the sense for the demand side of gold, whether it was ETF gold or physical gold or central bank gold. When central banks are buying gold, you have to pay attention. There's a reason, because they don't even trust their own currencies. They know better than anyone. At the same time, central banks also can't let their gold prices go too high. It's an interesting thing because if gold goes too high, it proves that their currencies are worthless. And so they're always riding a fine line. To your point about gold price recently, all of last year, gold kind of stayed in this wedge between 1780 and 1830. It couldn't rise. This year, it's going past 1900, but it's still not nearly as high as it's going to be. I mean, even Goldman Sachs has a price target of gold at 2,500. We can talk about the volatility in a second. First of all, again, measuring gold in dollars is kind of silly, though, because $2,500 that are more and more debased. It's not that gold is getting stronger; it's that currencies are getting weaker. But the recent surge in gold that got to really highs and came back into the 1900s, a lot of that's going to be driven by whether the war in the Ukraine escalates or de-escalates, because there's a lot of kind of knee-jerk headline fear-based gold buying. Again, not to be an apologist for gold, there's still constant manipulation in the COMEX markets of free price discovery in gold. What's unique about what's happening in the last few weeks, though, is when you're using gold for gas or you're creating a free market in commodities outside of the petrodollar, what we're seeing for the first time in decades is actual free market price discovery, including in gold eventually. As more and more bad actors or non-nation state actors that America or the West doesn't like start transacting in gold on their own, gold's going to set its own price, not the COMEX, not the BIS. That's not going to happen overnight, but that's going to happen. Because most importantly, when you look at the gold price, in my opinion, you can look at oil spreads and resistant line 15-year trends. You can look at T-cut formations. You can look at technicals and Bollinger Bands. At the end of the day, the most important reason to own gold is very simple. It's history and math. And it's mostly that history is a history of faith. When faith in a system dies, which is not predictable, not quantifiable, but as faith in your politics and faith in your currency dies, faith in gold rises. It's a very emotional asset. And what's happened, I think, since COVID and since the mandates, and I think since the war, and as inflation hits with your kind of instinct that politics aren't working, that the media isn't working, that government isn't working, that economy isn't working the way it should, faith starts to die. And then when inflation hits you, you start looking for solutions. Some will look towards cryptos, some will look towards gold and silver, but as faith dies, gold always rises. And that faith is not as quantifiable as yield curves, as bond spreads, as stock market resistance and support lines and all the fancy stuff that we talk about. But at the end of the day, again, for the last 5,000 years, gold always gets the last laugh on discredited financial systems. I can't think of one credible financial system right now in the world today. And so I play the long game. In the meantime, I'm not hugging my knees, thinking the end of the world is here, or that the dollar is going to disappear or die, or that you'll be needing Weimar-like wheelbarrows of money to buy butter. But I do think I'd much rather own grams of gold than coins of dollars or paper dollars. And so, I think for me and for any who can, whether you're investing in a Swiss reserve like ours, or you're going to buy hopefully the most safe gold alternatives you can, it's a good investment. I'm again very biased on that. But I think the gold price has not even started to see its best times. And there will be volatility because there's a lot of changing political headlines. There's still the COMEX market, but gold is consistently reaching higher new lows and consistently breaking resistance. And I think the gold era is really just begun. As I wrote last year, it's just begun. 2,500 is the target for Goldman. I think a few years from now, we'll be looking at a much higher target for all of these reasons. Some quantifiable, some more emotional. Gold is emotional, but it's based on faith. And that lack of faith in currencies is becoming more and more common today.
Mm-hmm. You brought up the central banks buying more gold. And you also brought up the demand from ETFs. So, when we look at a country like Canada, for example, we look at some of the recent actions by the government of Canada, the Central Bank of Canada, considering it doesn't have any gold. Do you see risk in some of the ETFs that hold gold and silver within the borders of Canada?
Yeah, I mean, we get this question a lot on our phone calls into Zurich, for sure. We get a lot of high net worth Canadians who can afford a $5 million or $400,000 minimum. The problem is not everyone can afford a service like ours. And so they're looking at they can't buy physical gold. Or if they try to buy coins, the premiums are too high, or they're getting gouged by some gold dealer down the street, which are really disreputable. And so it puts the average investor into an understandable pickle. There's a couple of things I'd say. First of all, ETFs in general and Canadian ETFs in particular, many of which like GLD or Fizz, which claim to have direct ownership with marked gold bars. So when you buy an interest in an ETF or a trust, that you really do own the gold. Well, that is true on paper, but not true in fact. That gold has gone through a lot of hypothecation between central banks and the BIS. So the actual gold that they say is an inventory behind that ETF isn't necessarily there. It's usually levered gold. The second thing is that gold in that ETF is usually stored at a commercial bank like HSBC or some other bank. Those banks have massive amounts of derivative exposure and operational risk. So there's intermediary risk. So when you own gold through an ETF, you actually don't own gold, and you don't get delivery of that gold bar on your front yard by calling the ETF and asking for it. They'll say you will, but test that theory out and see for yourself. If it's a large enough amount of gold, it's very unlikely you'll actually get delivery when you need it most. So I'm not for ETFs if I have the option to buy physical gold. That said, I know that the vast majority of the people watching this can't afford to buy bars of Swiss gold refined it, in Zurich or outside of Zurich. I understand that. I'm not trying to be flippant. In those cases, the best alternative are ETFs, but there are risks in ETF. There's risk in physical gold too. There's risk. There's always risk that the place where you store that gold could be compromised in some way. There's no perfect solution. For the majority of investors, ETF, gold and silver is the only viable option. What the risks are is the inherent operational risk and intermediary risk in the instrument itself. In the case of Canada, again, it's a unique scenario, but it's certainly something that could happen very easily in America. The idea that your government could tax those ETFs or freeze those ETFs or freeze those assets becomes more and more scary after the emergency powers that Trudeau used over a series of truckers. If that can send your leadership into a tizzy, what future event could lead to the confiscation of your assets because of an opinion you hold in your country or a political stance you take or a resistance movement you join? So I understand the concerns. Unfortunately, other than gold under your bed or in a mattress, which in itself has its risks, most people don't have a choice but those ETFs. And I can't say there aren't risks in them. I can't say that. That's not just because I'm a proponent of physical gold. It is the best alternative, but I realize that's not always available to everyone easily or cheaply. I still think, though, anyone who has some extra cash can buy physical gold and silver in their current jurisdiction. They just have to be creative, and they have to ask, and they have to do some research, but it still can be done. And I would recommend that over an ETF.
Yeah, it's kind of, as the rule in economics that everything is always a trade-off, right?
Yeah. There's always a risk. I mean, even with us, we have the safest private vault in the world. I mean, other commercial banks would store in our vault. And it's right out of a James Bond movie. Even that, I suppose, and it's nuclear bomb proof, it's gas attack proof, even that, I suppose, could be compromised, just like Fort Knox could be compromised. We think it's a better vault than Fort Knox, but even Fort Knox can be compromised. If the world gets crazy enough, we can only do the very best we can with the tools we have. Each of us as investors, not just us at Matterhorn, but all of us. You look for the best alternatives with the facts in front of you. And that's why the facts and transparency are so important today. But for anyone to promise a miracle solution is not being, I don't think, being fair. There is no such thing.
Yeah. And I mean, not to be sensational, but, I think if a vault like that gets compromised, I think we have bigger issues than worrying about where your gold is, right?
Well, Egon and I had these conversations. We had a German client call me the other day asking about how to protect his gold bars from radiation, from nuclear, infection. Now, in our vault in the Swiss Alps, we are protected from nuclear attack. But we were not trying to be flippant. But look, when you're dealing in a nuclear holocaust, I think the last concern you're going to have is radiation protection. We're all going to have bigger problems. I don't think
how about
new
radiation protection from yourself rather than your gold.
I mean, the world will be in such a mess then that it's hard to even conceive. But again, I'm not trying to dismiss the concern, but there are some things we can't protect against, even that. And frankly, surviving a nuclear holocaust with a bar of gold, I'm not sure if that's even worth surviving. But again, that's a personal decision I have. I don't see the world going that mad personally. I just think that financially we're in for a much more austere future than most of our generations have been used to. And certainly us in the West are not used to at all, unfortunately. And so we can be as prepared as possible. It doesn't mean the end of the world. It just means being eyes wide open, prepared, not being surprised. And it still means that the best things in life I still think are free: friendship, family, sports, your animals, the people you love, the connections you have. Certainly the money you have, the ambition you have is important. There's a lot of freedom that money offers. I'm not laughing at that. But ultimately, we have to remember, don't get caught in the rabbit hole every day of every headline. You'll go nuts. As we talked about before this, you have to have balance. You have to take care of your finances as best you can, but spend less time listening to guys like Trudeau or Biden or Putin and more time talking to your girlfriend, your boyfriend, your spouse, your kids, your horses, your dogs. I mean, I really know that sounds Pollyannish, but this is the things you're going to remember the most in life, your connections. And if you can get your financial house in order first, fantastic. That's absolutely essential. It's responsible. You should be as informed as possible. But if you spend too much time watching the news, you're going to just kind of get depressed. I'd say get prepared. Don't get depressed. Have your eyes wide open. Very few politicians have ever been truly altruistic or candid. That's just the nature of their beast. There's still good ones out there. I think Robert Kennedy Jr. is a great leader right now. He's not a political leader, but he's a great speaker of truth. Jordan Peterson. If you're on the left, there's others on the right. I mean, left or right, and you can find your voice. But get off that YouTube channel. You got to spend some time off of it. We all do, including you and me. So maybe.
And I think maybe an important point to add there is that as I try to do, I try to kind of balance, let's say, a right voice with a left, and try and, as you brought up earlier, try to hold two different arguments in my head at the same time and evaluate each for its merits. Yeah. Because the arrogance that comes from thinking that you're always right just because you have an echo chamber behind you doesn't help anyone.
I think people should really lean into the table and look for people of different opinions, as long as they're informed opinions, not just emotional. I think the problem we're seeing today in so many debates, whether it's gold versus Bitcoin or left versus right or identity politics, is this incredible arrogance on both sides, or the lack of an informed discussion. I've seen brilliant debates between the left and the right where both parties were very informed, and you could almost see them respecting each other. And even though they were competitive, like if someone can change my opinion because I have a better argument, I'm not so proud to not listen. I'd like to change my opinion on certain things. If you can give me the evidence, it's not to win. I think the idea that you have to win a debate or win an argument is kind of arrogant. What you should do is try to get as informed as possible. And whether that's on COVID, or whether that's on gold price, or whether that's on markets, bull or bear, whether that's on the war in Ukraine, to just take the headlines the Economist gives you and to ignore other things is wrong. But to just assume that Putin is misunderstood good guy, that's wrong too, or the misunderstood Hitler 2.0, that's wrong too. We have to be better than that. And that includes my frustration with the central banks. I'm sure there are some good people at the Fed who are trying their best to deal with what's in front of them. They're not all criminal, but the track record of not being transparent, I think, underestimates the population's ability to be talked to truthfully. I think we can handle good news and bad news if we're respected enough. And I think an audience that informs itself is a better audience, and a politician that will be informative is a better politician. Mm-hmm. And we, conversations like this and programs like this, whether it's 10,000 or 1,000 or 100,000 people, you slowly get that ripple effect to get people to challenge their own convictions and to look deeper at things and not just be angry and afraid all the time, because there's more to life than just that,
Absolutely. Well, Matt, I think that's a pretty good spot to kind of wrap up today's conversation. Something a bit more positive than the negatives. Yeah. Of course, your articles and more of your guys' research is available at goldswitzerland.com. Anything else you'd like to add before we do wrap up today, Matt?
Egon and we're going to be publishing a book probably in April just on gold called Gold Matters. We've spent the last couple of years working on this. I think that'll be a nice kind of one-stop place for people who want to look at the gold question, obviously as objectively as possible. It's just our argument for gold, and that should come out in the next month or so. We're excited about that. But other than that, all our articles are on goldswitzerland.com, English, French, and German. So jump in and you can see our thoughts and challenge our thoughts too. Of course, we welcome it.
Absolutely, Matt. I want to thank you so much for your time and your perspective today.
Thanks, Tom. It was a pleasure. Yeah.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.